As promised before the break, touch base with the management of Nucleus Software. Vishnu R. Dusad, who's MD and CEO of Nucleus Software, joins us on the show right now. Mr. Dusad, thanks very much for taking out the time. The one thing that stands out in your numbers is the fact that your margins have expanded considerably. So from 15% odd, they've moved up in excess of 21%. Is this the new base for the margins, 20% plus? Do you think it's sustainable above that for the remaining 2 to 3 quarters as well?
I would not be able to commit on that aspect, but what I can say is we have been able to utilize our capacity and infrastructure to deliver this higher revenue, keeping our expenses at the same level as our September quarter. And we do hope that we would be able to achieve something similar in quarters to come.
Dusad, the stock of your company is trading at the highest point of the session, up 15%, very strong profit growth. But can you explain that adjustment to us? This time around 23.5 crore net profit has been achieved because of higher other income, around 7.5 crore versus 4 crores, and the tax expenses are also down. That would have given some amount of help to your posted net profit as well. Can you adjust that for us and tell us purely on operations how much net profit have you made?
Yeah, thanks very much for asking this very important question. I think what I would request you to look at the R&D, the taxation part as getting reflected at a much lower level because of the R&D grant that we got from Government of India. Not exactly grant, but R&D expense deduction because on our profits. That has been for 9 months, and that is how 9 months would reflect 9 months numbers on profitability and taxation would reflect more appropriately.
Right.
And as regards other income is concerned, I think it's both the interest and also the
all right, Mr. Dusad. Yeah, point taken, sir. Can you also tell us, for FY13 you had posted an earnings per share of about 11.5 rupees per share, and in the first 9 months this year you've already done close to that, around 10 rupees. What kind of earnings growth are we talking about for FY15?
I would like to repeat our policy once again that we do not give any guidance, and we would like to stick to the same policy.
Just want to get a sense on your deal pipeline right now. Could you share with us details about some of the order wins that you've had in this quarter and how the pipeline is looking?
The pipeline is looking fairly encouraging, I would say, because we are now bidding in number of countries where our sales team has got active, and I would say this is looking fairly encouraging as we speak.
Okay, let's scratch that point a little more geographically. About two-thirds of your revenue comes from Middle East, Southeast Asia, Africa, largely emerging markets where the discretionary spend increases is slightly on the lower side compared to developed markets. IT spend increases. Tell us, how things are looking over there. What kind of interactions you are having with some of the large players there, and how does the scenario look like?
Scenario is looking fairly encouraging in the sense that some of our new offerings in the form of mobility suite and our new product that is expected very soon. Those discussions are fairly encouraging. People have experienced value. Some of our existing customers have experienced value, substantial value coming out of the mobility offering that we have, and we are able to communicate the same to other customers, and they are looking at taking those decisions and deriving value for their internal operations as well as their customers at a good pace. So that is what I can say in terms of our conversations with our customers. For example, our cash management suite, that also is we are coming out with our mobility module on cash management, and we have experienced some very good interest in that module as well. As we have experienced interest in our lending suite, we have 3 modules. One is MCAS, which is Mobile Customer Acquisition System, MServe, which is Mobile Self-Service Solution, and then M-Collections, which is Mobile Collections. And all these 3 modules are experiencing or are delivering good value to existing customers, and the prospective customers who are already our existing customers. For prospective customers for these modules, we are very confident that they will be able to derive substantial value within a quarter or at the most 2 quarters.
Okay, so can you quantify that? Because that would mean, if you're talking about 2 quarters, that would mean stepping into FY15. And as Ajay just asked you, maybe you can't drill it down to specific numbers on how much your earnings per share profitability would be like, but how would FY15 look different from what you've delivered in FY14?
I think we are looking at delivering at least these numbers in the incoming financial year. Similar kind of growth in coming financial year.
Right. Lastly, Mr. Dusad, you started by your first answer by saying or telling us the levers of growth which have factored this time round to post the kind of numbers you have. Tell us how much scope you still have in those factors in order to improve your earnings, in order to improve your margins, and what are the internal targets you have set for yourself in terms of margins?
Certainly, once again I would like to highlight the fact that we are building an intellectual property-led organization, and this is a world-class intellectual property which is delivering value to all our customers. And that being the case, the potential remains substantially high. So that's all I can say at this point of time, and what we are experiencing in our conversations with customers is giving us that confidence.
Yeah, but you're not denying the fact that this 20% plus growth in margins or these kind of margin levels are not sustainable. You're saying that this could be possibly the run rate going forward.
I could say that.
Okay, Mr. Dusad, we leave it at that. Thanks very much for joining us and giving us a perspective on your earnings. That's the stock actually in the session, which is on a tear. So that one is up 13% plus. It actually went up 14% during the interview, but 153 reacting to the numbers. Big margin expansion, which has been reflective of good operational efficiencies for the company.